Investors and traders, welcome to the channel Market Chat Pattern. Today is 11th of January 2024 and I hope everyone is having a great day. In this video, we are going to take a look at the key markets that we follow, and we'll take a deeper dive into the key US stock indices that we follow, and also we will have a brief look at the CPI data, the financial data that came out today and how it impacting these markets. We have quite a few things to cover, and also today is an eventful day because we have the Bitcoin ETF coming out as well. So we'll take a look at the different kind of ETFs available, and from now onwards we'll also begin to cover not in too much depth, but some crypto as well, the main ones such as the Bitcoin and Ethereum. And I will actually start a separate segment where we begin to track these, and also some of the other mainstream crypto assets as well. As always, this video is for educational purposes only and it is not a financial advice. And we will begin to take a look at these markets now. And if you are able to stick around till the end of the video, I will also be giving out the next days, that is tomorrow's standard deviation figures. And when we get to the section for the stock indices, we'll actually try to review how the levels that we had forecasted yesterday for today's trading, how the stock indices and the price action behaved against those levels. So quite a few things to cover. Let's go and start. And again, this video is for educational purposes only and not a financial advice. Okay, so starting with the bonds. The bonds had a green day today. We had the 10-year treasury note closing up about half a percentage point. The 30-year long bond futures were actually stronger, so closed up about 61%, 0.61 percentage point, or 24 ticks. But intraday, when the figures for CPI came out, there was a lot of volatility. We'll have a look at that as well. The dollar was kind of flat today. The Euro USD also pretty much flat. And here the interesting part is that Japanese yen actually gained against the US dollar, or the US dollar was weaker. That is interesting because here the US dollar had been actually creeping higher, or quite significantly. We had seen those percentage points in our previous updates. And GBP USD, it's kind of stable in the sense that it gained about 18 pips, or 0.14 percentage point, and the GBP USD seems to be stronger than the Euro USD over the course of last 1 week or so. Now the gold lost about $6, and silver was a little bit weaker than the gold and lost about 0.35 percentage points, or about 8 cents. In the energy markets, the crude oil WTI futures contract that we follow, because of some geopolitical news coming out of Iran, where they had seized some oil tanker. You can Google about it. We don't discuss too much about these news, but it did impact the market. And the WTI crude oil futures contract actually closed above $1.53 per barrel, or 2.15 percentage points. And natural gas was also higher today by 0.29 percentage points. Moving on to the US indices, majority of these indices actually closed in red, but by not a lot, although intraday there was a lot of activity. We'll take a look, or we'll do a deeper dive about these. S&P 500 cash lost about minus 3.23 points. The futures contract, E-mini ES 500 futures contract, was a little bit weaker compared to the cash, and lost minus 8.25 percentage points. NQC Nasdaq 100 E-mini futures actually managed to just scrape a positive day by 1.25 points. Dow Jones, the E-mini futures contract, lost 31 points, and Russell 2000, has been the constant theme that it has been moving actually lower, and it was the strongest one in terms of its decline, losing about 0.92 percentage points. Also begin to include the crypto, so we'll just take a look at the major ones for now, which is the Bitcoin and Ethereum. These are 24/7 markets, so when I when I was preparing for the video, these were the price level we were looking at. Bitcoin, although the ETFs came out, actually closed lower, it was lower, and the ETFs will take a look some of those in terms of price action as well. And Ethereum is performing a little bit better based on this data that we are looking at right now. Let's have a look at the CPI and how those figures came out. So this is the chart coming from the forexfactory.com in their calendar section, and here these figures which are in red here, these are for the US dollar or US currency, and we have the CPI figures here, and these are the actual figures in green which came out, and these were the forecasted or expected figures. And what we can see is that the CPI year on year actually came out hotter than expected. So it came out as 3.4%, whereas the expectation or the forecast was 3.2%. So actually the figures were higher than expected or hotter than expected. It did have some knee-jerk reaction in the markets intraday, and we'll begin to take a look at that. But one of the key things is that the CPI was a little bit higher, and maybe what it means is that the market participants begin to discuss whether the Federal Reserve, who have actually announced cut in interest rates, whether they will actually be aggressive in that, or they will delay that, or they might not actually do that at all, because if the data keeps on coming hotter than expected, so perhaps a lot of these things to digest, but again too soon as well. So it's just speculating on quite a few things. While we are here, let's actually have a look at the news about the Bitcoin ETF. So here is a list. I will also paste this in the description. These are the ETFs which came out, with the exception of BitO and GBTC. I believe these have been there from before. The other ones were approved by SEC, and now they are available for trading. We'll take a look at some of these briefly. For example, we'll take a look at ARKB. This is the Cathy Woods company's ETF for the Bitcoin. And we will also take a look at iBit, which is the iShares Bitcoin Trust. Just a very first trading day for these, so we'll just have a look at how these performed, and I will be starting a separate segment where we'll begin to cover quite a few of these just for the crypto itself. Okay, let's now I'm going to move these away, this part, and let's actually have a quick look at the bonds chart. So this is the 30-year bond futures, and what we can see is that today was quite an active day. The market actually went lower, it tested these lows again, was able to find support, not able to or not breaking below the 61.8% Fibonacci retracement right here, and it closed higher. And for the 30-year long bond futures, we did have some auction taking place as well. And just to go on the 60-minute or 1 hour chart intraday, just to show you, look at this is when the CPI figures came out. Let me actually go on half an hour, it's a little bit better to see it that way. So this is the well, I'm based in the United Kingdom, so the time is 1:30 p.m. for me, but this is the actual time when it came out, the figures. So look at this, there was a big spike up, and how such a big candle lower, so about $1,000 up, $1,000 down, in just a matter of half an hour of trading. And then what happened is that the market actually just began to oscillate around here. And one of the key things that I just wanted to show you is, if we just do a retracement and we just put 38.2% Fibonacci retracement, here we go. So the recovery high after making this low went right to the 38.2% Fibonacci retracement, and then it went lower after finding good resistance from here, and on the way up when it finally broke out of it, then we knew that actually the market wants to recover, and this is what it did, and this was the kind of price action that we were looking at with these key figures coming out today in the bond market, which is a huge market. Now let's take a look at the dollar index. So this is the chart of dollar, and here a dollar just being sideways for about a week now. Again, just an inside bar within this big bar. Which direction the dollar is going to break out into, we'll have to wait and see. One of the things is look at this channel formation. If the dollar breaks out of the channel and especially goes above this level of 102.73, roughly we can say 103 level, and then dollar strength is coming back, and we can see dollar rising, and of course the dollar index is 53, nearly 50 to 53% is the euro USD. Dollar moving higher, the USD moving lower, and it could also have implications for gold as well, and perhaps even for the stock market as well, which could come under pressure. Let's take a look at gold now. Here we go. This is the futures contract. This is the COMEX gold. I'm using the continuous contract being plotted by Trading View, and this is the price action we were looking at for Thursday, January 2024. And again, a move up, move down. Not really any clear direction for it, and what we can see is the price has actually closed at right at the 61.8% Fibonacci retracement, and it's just in between the 78.6% and 61.8% Fibonacci retracement, but it does look like that the price actually might be targeting lower, and might actually in fact be trying to test the 78.6% Fibonacci retracement over the course of next few trading days. Yeah, I will update you guys more about if I see any further pattern formation here in gold. And taking a look at natural gas, here we go. So look at this. The natural gas has been in a bull run, although it's been in a big bear market, but looks like there may have been a CIT, a change in trend for this, and it might be actually eyeing these highs around here, but at the moment they are in at a bit of a resistance level because of the 78.6% Fibonacci retracement. But moving above this, around here, especially after filling in the gap, it's gonna be pretty bullish for the natural gas. Now let's take a look at the S&P 500. So this is the cash index. Here we go. Here one of the things is that I believe it actually managed to take out the highs of so this high was 47.9850, and this high was 47.9330, 47.98, and yeah, so it actually managed to take these highs out by a little bit and actually close lower compared to the low of this really candle coming in from 20th of December when the volatility the volume was really low. But the cash index has still not taken out these highs out, so there might be a chance that actually this ABCD pattern that we have been watching for quite a while, this 49.10 level roughly might actually still be on the cards. But if we just look at the price action itself, it's been an extremely good trend, like strong trend or really quick trend, however you want to call it. Fabulous kind of in quick time as well, the amount of gains that took place, but it does seem that it is getting tired a little bit, and we are watching for certain key levels. It actually also broke below this low as well, then regained. So this is what we are watching in the cash index. Then taking a look at the E-mini S&P 500 E-mini futures contract. Here I believe, let me double check whether it took the 28th of December high out or not. 48, 41.50 and 48, 41. Now it did not in this contract, it did not. So what it has done in fact is basically it has well, it just tested the top of the profile, and then some of the standard deviation levels that we were watching for. So here we go, I'm bringing these up on the screen. Oh, excuse me, it just disappeared. Okay, here we go. So what it has done is, if we look at the -1 standard deviation, these are the daily levels, 47.88 and 47.56. So it went below the 47.88, but it was above the -2 standard deviation. So this is what we were expecting for it to kind of bottom in that range. And this is where, when intraday, quite a lot of selling pressure came in, especially after the open. It found support between these levels, and look, it closed much higher. And similar thing for the NQs, the Nasdaq 100 E-mini futures as well. The -2 standard deviation is 16,731. Let me actually push this aside so we can easily see the chart. Here we go. So for NQ, here we go. And the low came in around 16,753. So actually a little bit above the -2 standard deviation, but below the -1 standard deviation. So within that range which we were expecting for the price to move into. And of course the price actually closed much higher, but right below the 78.6% Fibonacci retracement. So yes, if it begins to close below this low, the chances are it is actually going into this region right here, between this level of 16,584, or roughly 85, and 16,418 is possibly where the price might want to go and test this region. If you had watched our video which we did over the weekend, we were trying to use a timing model and do some analysis on the time axis, and we were expecting some sort of a low perhaps to come in next week or early part of next week. We will have to wait and see. The ideal date we were targeting was around 17th, 18th of January, but it could be a little bit early. We'll have to wait and see how this pans out. So this is what we are watching here. And now what I'm going to do is just jump into the Bitcoin, and let's take a look at some of the Bitcoin ETFs, how they actually traded. Before doing that, so I'm not going to go into other indices because we have quite a few things to cover, and the video is also getting longer. But I've shown you the standard deviation figures from yesterday, and those pretty much were within a line, with the exception of Russell 2000, which is much weaker. We already know about it. Then what we are going to do is that towards the end of the video, I will also show you the standard deviation figures for tomorrow or next trading day, and I will also put them in the description. So those of you who want to look at those figures in more detail, you'll have access to those there. So we'll start with a BitO first. This has been there for some time, and this is ProShares Bitcoin Strategy ETF. And here what we had been we had done a video about this in our stocks video some time ago, and we were watching for this 38.2% Fibonacci retracement right here, and this ABCD pattern 1-to-1 price projection completing quite nearby. Today what we have seen is the market make an attempt to break out of this 38.2% retracement. Before that, it had just been hovering around it, and today it actually closed lower. So it's in that ballpark figure. Now we know that the news is out with the ETF formations. I don't know whether that's going to have some impact or not, but it's also possible that maybe there is some consolidation which takes place around this level. So we are watching that. While we are here, just let's really quickly take a look at the Coinbase. So this is the Coinbase. Um, it's one of the major exchanges on which the cryptos are actually traded, and these issuers who are actually launching their ETFs, they will have to, I believe, cover or buy the Bitcoin in the spot market. I will be doing a video. I'm doing more analysis about how these ETFs are actually supposed to be working. So they will be actually going to major exchanges to do that. So therefore, these kind of stocks like Coinbase, etc., exchanges, they will generate, of course, their commissions on through this as well. So here, what we were looking for was this. We have this this thing. This is our market symmetry concept. Here we go. Because the last time the rally was for this much, so we just bring it here and we actually point it from here, or projected right from here, and what we see is that this is actually where the market went to, and we have seen a topping formation come around here, and today actually these lows also being taken out. So this is some sort of a top in place, and today it's actually closing below the 38.2% Fibonacci retracement. Another way to look at this is basically kind of Darwin's box kind of thing, not exactly the same, but my own version of it. If we just take this entire range from this low to this high and we just project this from there, we also get in this ballpark figure. We're actually a little bit higher where the actual high came out, but again, just pointing this out, that now that the ETFs have been approved, there have actually been a little bit of a sell-off taking place. Now let's take a look at some of these ETFs. I am going to pick, let's say, the iBit. This is the iShares Bitcoin, and we have a very interesting candle because today is the first day of trading. So here we go, and let me actually do it like this. Look, I don't know, I mean, we'll just take a look at the range. The open was $27.94, so it's gonna be around here. That's where the open was. Then it went as high as the $30 per share, and then as low as $26.28, and then it just closed around where's the close? $26.63. So a bearish candle, a bearish trend actually. And then if we look at the ARKB, which is Cathy Wood's ETF, here we go. Similar kind of price action, but the interesting thing is that this one is actually priced a little bit higher. I don't know what the reason might be, but this ETF is a little bit more expensive in just terms of price. I don't know in terms of fees and etc. like that. I haven't done that research. I'm not going to comment at all about that. But this one closed at $46.95. Let's take a look at another one. Let's take a look at HODL. This is the Van Eck Bitcoin Trust, and here we go. And this one is also right about in terms of price range with the ARKB, the Cathy Wood's Bitcoin ETF, and this one also closed actually lower for the day. So this is the interesting stuff. While we are at it, why not actually take a look at Mr. Bitcoin itself? And here we go. This is the Bitcoin, and what we are looking at is some selling pressure coming to this market when it was reaching about the 50,000 per coin mark. And yeah, I believe when it gets to such a close psychological level, maybe some profit taking, maybe something else, I don't know. I'll just show you. This is my previous analysis which I had done quite a while ago, and we were really looking at 28,000 as the key resistance level. Now the market is reaching nearly 50,000. 28,000 looks like okay, it's not a big deal, but back then there was a lot of resistance, and we have this 38.2% Fibonacci retracement coming out. We had the 1.272 expansion there of this swing, and it was telling me that it was a great deal of resistance there. Once this resistance was clearly cleared, which in fact did not really happen, sometime we got into the later part of October, or shall I say second half of 2023, It remained as a region where the market went up, and then it went into a lot of consolidation and a flag formation like this. Tried to break above it. These highs couldn't really sustain it. It went down, then it wasn't able to break these lows either, and then we had this next leg move higher. So I will be doing more technical analysis on the Bitcoin and have a separate segment, but for now just want to also keep the video brief, and we'll just leave it here for now, and we'll cover these more in detail in another video for crypto segment. So thank you very much for watching the video, and if you like how we look at the markets, how we do the technical analysis, how we like to use the Fibonacci ratios for price projections, expansions, contractions, expansions and extensions really, then please do subscribe to the channel. Think about that, and if you do, then hit that bell icon button. That way you will know when the new videos are posted, so you will not miss on anything. So I wish you having a great day and wish you good luck and good trading.